All right. Good morning, everyone. Thank you all for joining. We're going to wait another minute for a few more folks to join, and we're going to go ahead and get started. Thank you. All right. Good morning, everyone. Thank you all for joining. We're just going to wait one more minute for a few more folks to join, and we'll go ahead and get started. All right. Let's go ahead and get started. Good morning, everyone. I'm Marcus Daniels. I'm a commercial real estate broker here in the DMV area, and I am excited and pleased to be able to host this seminar this morning on how to get started in commercial real estate. Just to tell you all a little bit about myself, I'm based in the Washington, D.C. area. I've been in the commercial real estate business now for over 10 years, and I'm with NAL Michael, which is a commercial real estate firm based in Prince George's County, Maryland. And we primarily focus on the DC, Maryland, Virginia market, specifically around the sales and leasing of office, retail, multifamily, industrial, flex properties, specialty properties such as churches, schools, daycare centers, as well as self-storage facilities, outdoor storage facilities, and land for residential and commercial development. I'm also an adjunct professor at Thomas Jefferson University, where I teach in the Master's in Real Estate program. I teach a course in commercial real estate development. This is my third year teaching that course, and we are just starting that course actually for this spring semester. So I'm excited to be able to share with you all some principles and really the fundamentals of commercial real estate, and to talk a little bit about opportunities for you to get started, whether you're looking at a career in brokerage or you're looking at career in investing or development. So again, this will be a recorded session. So if you have to step away, I'll send the recording after the session, but feel free to use the chat if you have questions. And also just feel free to take notes as needed. So before we get started, any questions before we dive in? Okay. All right. So I'm going to share my screen. And again, guys, just feel free to follow along. If you have questions, just feel free to use the chat, and we'll go ahead and we'll pause and make sure we answer those questions. So again, for those who are on the call, feel free to network, use the chat as an opportunity to introduce yourself. So where you're from, share, what is what brokerage or firm you're with, what has brought you here today, what you hope to get out of the session, and make sure to try to answer as many questions and cover as much ground as possible. We'll save some time at the end for Q&A as well. All right, so let's go ahead and get started here. All right. So again, one of the things that um, I'll share with you all just a little bit about my journey before getting into commercial real estate. I previously was a chief of staff in the Maryland State Legislature and worked in community development, affordable housing, primarily in the Baltimore area. And before joining NAL Michael and Star Commercial Real Estate, I was a assistant vice president at a bank in Baltimore, doing financing for primarily affordable housing, community development projects. So most folks who are in the commercial real estate business that I know, everyone has had a different path into how they got into the business. Whether you were a residential real estate agent transitioning to commercial real estate, or invested in residential real estate and now you're looking at buying your first commercial property, or if you own a business and you're looking at leasing or buying a property. So a lot of people have different paths into commercial real estate, and I would say there's no linear path. Everyone's path is different. So what we'll cover today again is the principles of commercial real estate. We'll take some time to talk through again opportunities starting off the new year for you to consider as you look at your business and strategic plan for the year. And again, think about commercial real estate as a wealth building strategy for you and for your family. So commercial real estate is really defined as any property that's used for business purposes, or a property that is used to generate a profit. So the key asset classes in commercial real estate include office. So Class A office buildings are brand new. We constructed office buildings within the past 5 years. Class B are buildings that aren't as new, but again, are pretty nice buildings. But again, built maybe within the past 5 to 20 years. And then Class C buildings are buildings 20 years older. So you have retail, and of course, retail, we know malls and strip centers as well as shopping centers. Industrial, you have warehouses, and you also have flex buildings that have office as well as warehouse space. And then multifamily apartments, land development, and then specialty properties such as medical, hotels, and mixed use. So you can see there's a lot of different property types in commercial real estate, and there's a lot of different niches that you could focus in. as an investor, as a broker. So again, looking at how people make money in commercial real estate, whether you are a landlord, whether you're a, owner, and then looking at it from the perspective as if you're a tenant or landlord, a tenant and a buyer, looking at how you can make money in commercial real estate. So typically, most landlords are looking at how can they generate the most rental income from the commercial property, and that's typically structured in a way through lease agreements with tenants. And those lease agreements have the ability to contractually lock in the tenant to lease a certain amount of space over agreed upon a time with certain rights and responsibilities for the tenant, as well as rights and responsibilities for the landlord. And it codifies that relationship in legal agreement. So as a landlord, the rental income that you generate can be not only from the rent in the commercial real estate industry, but it could be from parking income, it could be from laundry income, it could be from other fees that you generate. So looking at all the different ways that property can generate income is really important when you're looking at an asset. Another way of making money in commercial real estate from the appreciation of the asset. So again, property values increase over time. So being able to buy a property in a good neighborhood, good submarket that's experiencing good appreciation, looking at recent sales of similar commercial properties, have the price per square foot numbers gone up, have the sell prices gone up, what has the activity been transactionally, often leasing and sales for those types of properties in that immediate area in that submarket, and that would give you a good indication of, again, projecting what the appreciation of the asset could be. Leverage and financing. So again, we've all heard this term before, and I'll say it again, but using other people's money. So um, the the benefits of having leverage in your financing to be able to not put all your equity and cash into to buying a property, fixing it up, and you not having reserves. So the ability to use debt and leverage is a powerful tool that allows investors the ability to be able to spread their resources and limit their exposure. Obviously, in terms of financing, you have high interest rate loans, you have hard money loans, you also have conventional financing, which in some cases for some commercial properties you may have to put 20%, 30%, 35% down just to get the debt financing for the acquisition of the property. But again, the leverage and finance is a powerful tool as a way to be able to limit your risk, but then also spread your portfolio by spreading your equity around to different deals and projects. Next on the value add strategy. So again, um, fix and flip in commercial real estate. So buying a distressed property, renovating it, repositioning the asset. So maybe it was one particular use before, and now you're re positioning the asset into another particular use that is in more in demand at this particular time. And then looking at different lease up strategies of how you get tenants and businesses interested. So looking at different concessions, is it free rent? Is there um, a tenant improvement allowance that's offered? Those types of things are different value add strategies that, particularly as an investor and landlord, you have to constantly keep in mind because it's a competitive environment, particularly in the environment now. Again, the commercial real estate market across the country where there's a lot of inventory. And there's still a significant spread in terms of what a seller's expectation is in terms of pricing and what a buyer is willing to pay. So that is something to keep in mind. And then finally is the triple net lease model. So we'll talk about different lease structures, but again, in it's fairly common in retail real estate as well as in um, as well as in industrial real estate to have triple net leases, which is a passive income model that requires the tenant to pay a base rent for the leasing of the space, and then all of the utilities, taxes, insurance, and common area maintenance costs associated with the use of the property. So the common area maintenance costs could be related to snow removal, landscaping, trash pickup, things of that nature for the operations of the property to the benefit of the tenant's use. So those things are really important to look at when you're exploring a property, whether you're looking at selling it or whether you're looking at buying it yourself, understanding how the asset performs, where's the opportunities for cost savings and value engineering, and then looking at lease structures, particularly the triple net lease for retail and for office, which is very common to be able to have the tenant really cover, I would say, a significant amount of the cost for the operations of the property. So understanding cash flow and cap racism is important as well. Again, on the investment and on the broker side. So we have these three formulas, which I'll talk about here. So again, the most common formula that in commercial real estate that investors use is the net operating income formula, also referred to as NOI. So the NOI formula it's a simple formula. So net operating income is calculated by taking the total income on a property and then subtracting the total expenses for the property to arrive at what the net operating income is for the property on an annual basis. So as an example, if my income is $200,000, total income is $200,000 for my retail strip center, but my expenses are $150,000, then my net operating income is $50,000 for that year. Next is the cap rate calculation, and the cap rate and cap being short for capitalization rate is a function of the anticipated return on that investment per the market and per this specific submarket in relation to similar properties that are recently sold. So again, it's a function of the return on investment. So taking the NOI, the net operating income, and then dividing that by what the purchase price is for the property will give you a function of where a property is priced from a cap rate perspective. Now, you can also um, re-engineer this formula to determine the value by taking the NOI and multiplying it by the cap rate as well to determine what is a particular value, looking at dividing it by the cap rate to determine the value of a particular property based off of different assumptions. So as an example, what is the property worth at a 5% cap rate? What is the property worth at a 6% cap rate, 7%, 8%, et cetera? Though the lower the cap rate, the more secure and less risky the investment is. The higher the cap rate, the more risky but potentially higher upside the investment is. So as an example, just like when you're investing in the stock market or bond market or in certificates deposit CDs, your return on investment, right, RR is going to vary based off the amount of risk that you're particularly taking for that investment opportunity. So again, that's why you see a lot of people look to diversify their investment portfolio by investing in real estate because have more passive investments and more aggressive investments. So again, put your money in the CD, that's try nets you, more than, 1%. The stock market, maybe 4 to 5%. Um, in the commercial real estate market, you're looking at, as an investor, you want to have returns somewhere in that, again, more conservative, 5%, 5 to 8%, and then more aggressive, that could be anywhere from 8% to like the mid-teens or higher. So just a few key metrics to keep in mind. Again, looking at the cash on cash return. So again, as you're underwriting particular opportunity, understanding how much cash are you putting into the deal, and then once you successfully actually execute the strategy and you prepare to exit the asset, what is the profit that you get, less all the expenses from the transaction. And that feeds into the equity multiple as well. So again, just a function of how much money did I invest versus how much money did I make from that investment. So these again are just a few, like, the most important calculations that investors, brokers use. And I would challenge you guys to take some time to dive into these a little bit more. I'll send out some notes and then also some more examples and case studies um, throughout throughout this seminar that will kind of reinforce some of the concepts that we're discussing today. And don't worry, because when I first started in this business, I didn't understand a lot of what this meant, and so don't feel overwhelmed. Again, everyone who's in this business, they started not knowing anything, started from just doing exactly what you guys are doing today. So next is sourcing deals. So obviously, everybody who first starts in commercial real estate will ask, how do I find deals? How do I get listings? How do I identify off-market opportunities? How do I get access to on-market deals, et cetera? So we'll take some time to talk about that. And again, if you guys have questions, just feel free to use the chat, and I'll pause and I can pause and feel free to answer the questions. So again, sourcing deals is really a function of like business development and prospecting. So as you look at your business model and as you look at um, what particular focus area you want to pursue, it's important to understand who your target audience is, right? And who is the population that you're looking to connect with. And so, as an example, when I first started, I said, I'm going to focus on two areas of commercial real estate, and then once I get good at those two, I'll start doing another two. So I had started at that particular time. I started with office, and then I had started with churches, schools, daycare centers, so like specialty properties. So I started with office and specialty properties. Now, reason for that, those two areas is that based off of the market at that time, this is over 10 years, almost 11 years ago, based off of my research of the market at that time, that was a lot of transactional volume, both in leasing and sales of office space and office buildings. Obviously, this is pre-COVID, different world with pre-pandemic. And then churches and daycares and schools were in high demand, and those typically sold pretty well too. So picking two areas, it's really important, and just focusing in. So making a list of all the owners of those properties in a particular area. So when I started, I said I want to know all the office building owners in Bowie, Maryland. Okay, I need to make a list of all those owners. I need to understand how, what does their asset look like? How many square feet? Who are the tenants? How's it performing? How much vacancy do they have? What is the asking rate? Who is the agent if they have one? Who's the owners? How long have they owned the property? So again, finding those properties you can use like free platforms like LoopNet. There are other platforms like Crexy. CoStar is is a paid platform, but again, that's primarily used, CoStar and LoopNet together, primarily used for the marketing of commercial real estate listings, but then also CoStar is a more of a research platform that allows for you to look up owner information, property information, market reports. It's very comprehensive in terms of like information that it has. Crexy is another site as well. But if you don't want to pay, have to pay, you can use LoopNet to start. And then I will also say if you are a residential agent, use the MLS and try to cross kind of cross check that information between the MLS and then LoopNet. So reaching out to owners and reaching out to potential sellers, and even to potential tenants that you may want to represent or landlords you may want to represent to lease their space. It's all about your ability to network and to put yourself out there, right? So you have to be very intentional about what you are seeking to accomplish. If I'm an investor and my goal is to acquire a 10 unit multifamily apartment building, I need to make a list of all those owners. I need to get get their names, get their phone numbers, you know, make calls to them. I need to get the address, maybe the ownership address from the tax record, send them a letter. If I can get it, find a name, look them up on LinkedIn or Facebook, attend investor networking events, attend um, real estate investor meetups. All of these tools are what you have to use to be able to really grow and scale a pipeline of business and source deals. You'll find that a lot of the folks in commercial real estate, they always love a good off market deal because they they feel like they don't have to compete against the world for that particular property. So I found that being able to get listings is a good way of growing and scaling your business. So even if even if you're starting with you're starting with land or you're starting with retail or you're starting with industrial, getting listings and getting your name out there, putting a sign up, sending out flyers and promoting that listing is going to only help you to grow your network because you're constantly you have a property that you're marketing, or in the case if it's not not a listing, and let's say it's a client you're working with, like a tenant that's looking to open in a event center, you're calling agents, you're calling owners, you're reaching out, you're building relationships. So as a function of sourcing deals, you will grow your network, but you have to be intentional about how you do that. And every day you should be speaking to someone new about an opportunity. So I'll pause there for questions and then we'll continue on. Any questions, just feel free to drop in the chat, guys. And then I will feel free to answer them and we'll continue along. All right. So looking at deal analysis, what to look for, location, location, location. Heard that a million times in real estate. Location is very important as well as the market conditions. Both the market conditions from a macroeconomic perspective. So as an example, the entire US economy versus the macroeconomic environment looking at a particular city or a market. So in this case, let's say Washington, D.C. So we have to look at that particular location, what makes it unique, what makes it special, what are the market drivers, where are we seeing positive growth, like what sectors. So as an example, in Washington, D.C., we know since the pandemic, a lot of folks have been working from home or working on a hybrid schedule. That's had an impact on the office market. Because of that, we've had significant vacancy, particularly in like downtown. central business district areas, and that has really had an impact on the retail business as well because more people are not working downtown 5 days a week. Maybe folks are coming in 2 to 3 days a week. They're not eating at the restaurants after work. They're not going to happy hour. They're not shopping at the stores. That's why we've seen um, a lot of closings of stores and restaurants because it's a trickle down effect. So looking at those market conditions can inform you of opportunities in the market. And one of the things that we've seen in Washington, D.C. is because a good amount of these office buildings are now experiencing significant vacancy, the conversion of office buildings into apartments. And this is not just in DC, but this is across the country because of the fact that folks are working hybrid schedules or fully virtual. So when there's misfortune in a particular asset class, there's always an opportunity and a way to potentially reposition that asset. And that's something that sophisticated investors and brokers are looking for, looking at something and not seeing for what it is today, but what it could potentially be. I'm looking at our company, Daniels Development Group. We primarily focus on real estate development, real estate acquisitions for adaptive reuse and for affordable housing and mixed use development. And one of the opportunities we're looking at right now is a 6 story, 60,000 square foot office building that is fully vacant and seeing how is there a way that we can convert this building to another use. My initial thought is maybe to apartments or lofts with some retail on the first floor. But those are the types of, as an example, those are the types of things that you can look at. Another example would be maybe it's a vacant bank or a vacant restaurant and not looking at it for what it previously was used for, but what it could be. So I've sold properties and converted, them to many different uses, whether it's a bank into a dentist office, a car dealership into a church, office buildings into apartments. So looking at the market conditions, and that's going to help inform you of where opportunities are in the market. Also, tenant stability and lease terms. So we know that supply and demand is very important in commercial real estate, and understanding that if there's a oversupply of space in the market, it becomes a tenant friendly market. That's definitely the case right now in office. Not so much in retail and industrial, but definitely in office. So what does that mean for you as a broker? Is does that mean that you um, should pivot more to focusing on working with tenants? Should make a list of businesses that you want to work with and reach out to them and ask them, hey, are you looking at expanding? Are you looking at relocating? Are you looking at renegotiating your lease? That is very, um, very attractive because a lot of tenants, you'll be surprised, don't have representation or they just don't know how to go through the process in terms of relocating, finding a new space, expanding, etc. Next, one of the things that's important to understand is the zoning of a property, and the zoning in short is going to let you know what you can and cannot do on that property, what uses are permitted, what uses are not permitted, which is important, and then also understanding what uses can you it may not be permitted, but you have to submit a request for the use. So what does that look like? When you're going through the process of looking at a property, it's important to understand what is the zoning, how can you use the property? Because that is directly tied to the value of the property. So I always give a classic example that my mentor taught me when I first started in real estate. At the time I was 27, my mentor was 72 years old. So of course there's a bit of an age gap there, but he was really good at giving um, advice and telling these little stories that are relevant to fundamentals of real estate. So I'm going to share one of them, which is appropriate for what we're talking about here in terms of what to look for properties and for deals. as well as zoning and the development potential. So let's assume that we're standing in the middle of the road, and on both sides of us, the two farms. On our left side, there's an apple orchard, and on the right side, there's a farm that is growing oranges, right? And let's assume that both of them are the same size, and let's assume that the apple orchard, those apples sell for $1 an apple, and it's let's say it's 100,000 apples. That's $100,000. But let's assume that the orange farm, those oranges are selling for $2 an orange, and let's assume it's 100,000 oranges. So the yield from the orange farm is 200,000 versus the apple orchard, which is 100,000. So then the question becomes, which property is worth more? They're both the same amount, like size land. So one would think that because it's the same size lot, that is, it's it's the same value, but that's not the case. The value of real estate is tied to the yield and the return on investment in commercial real estate. So that's very important to look at when you start understanding values and you start understanding, well, why did this property sell for this versus this one? It's tied to the return on investment and the yield. So finally, looking at comparable sales and looking at market rents is really important. I would say every week I'm looking at what properties have sold, what properties have been bought, what properties have been leased, what tenants are moving in, what what businesses are open and what businesses are closing, because that is going to help you to stay on top of the market and opportunities in the market. Because you may find, oh, this business announcing they're closing after being in business for 50 years. Maybe they're looking at selling their store. Maybe they're looking at, selling their warehouse, right? So those are the things that you have to consider. And then also the market data is key in this business because we're constantly exchanging information with clients as well as with um, agents and investors and different people involved in the process. So having good data is really important in terms of, hey, these are the comps of some of the properties we've sold over the past year. This is what the market price per square foot, comp price is. This is what the sub market is, et cetera. Being able to speak to the market. So again, when I had first started, I knew that if I DC, Maryland, and Virginia is so big, that I needed to focus in on certain areas. I said, I'm going to focus in DC, I'm going to focus in Prince George's County, and I'm going to focus in Charles County. And I just focused there to start. And then as the business grew, you can expand. But you don't want to choose a large area because it's a lot of properties, like, and it's a lot of different markets, sub markets within the larger DMV. So just something to keep in mind. For those who want to call not in the DMV, it's wherever you may be, it's relatable. So again, your urban core, downtown, midtown, kind of suburban market, focus in those areas as opposed to your more rural tertiary markets where there's not a lot of transactional value. So underwriting a deal is very important. This is a high level seminar, so we're not going to get into the into like financial analysis and underwriting here. As a part of this session and with the notes, I'll send out a link to our YouTube channel, and I ask that you guys please subscribe to our YouTube channel that has free videos. It also has previous seminars that we've done, going a little bit more deeper detail of some of these concepts and topics, as well as please share this recording once I share it with you guys and we post it on the YouTube channel with agents at your firm or folks that you know are interested in starting commercial real estate. We offer free coaching. We offer free seminars. I would say on a really on a monthly and or quarterly basis, depending on demand. But we do offer weekly, bi-weekly, and monthly coaching and mentorship to investors, real estate agents, and and professionals that are looking at really like taking their career to the next level in the commercial real estate industry. So I'll share information about the coaching and mentorship program at the end. But again, for those who are looking to like take a deeper dive into some of these concepts, we go through it through both in person and online learning through a self-paced course, and then also through the weekly, bi-weekly, and or monthly coaching calls where we really get into the weeds. I help you through deals. We talk through business development, prospecting, but we also really build your technical skills related to how do you value commercial real estate, how do you underwrite a deal, how do you negotiate a letter of intent, how do you negotiate a contract, what is the sales process, what's the leasing process, how do I build my business, I need help. That's what those coaching calls are for. So again, I will share that information with you guys. Please subscribe, like the YouTube channel, and share this video with a friend. So continuing along, underwriting the deal, we have just again the simple formula of the NOI is very, very simple and an important formula to calculate any property, particularly if it is a property that has tenants that is fully leased or partially leased, where there's income in place. You need to understand how that asset performs and where's there opportunities to increase income, where there's opportunities to uh, decrease the expenses. So I'm getting an income and expense breakdown, like an itemized breakdown of this is all the sources of income, these are all the sources of expenses are very important, and literally going through each line item and determining where's the opportunities for cost savings or value engineering. Property management of commercial properties is very important. I highly recommend, particularly if you're buying your first commercial property, or even you are the agent for a commercial property, like recommending to your owner to hire a property manager because it is. I will tell you, I never wanted to be in the property management business. It is a very profitable business, but at any given time, something can go wrong, and you have to be at the beacon's call. Most owners they don't want to have that headache, so they pay a property manager to handle everything. The property managers also can help you to be able to find ways of increasing income and lessening the expenses for the property. So that's very important, and I think the call, the investment in a property manager is worth it, as well as having, building engineer contract relationships with contractors, et cetera, when issues come up. Next, looking at your financing options. So what options do you have to be able to acquire the property? Again, we talked about the value of debt, right? And the ability of an investor to be able to not have to pay all cash for a property and be fully exposed into um, um, putting all your cash into a particular property. If it doesn't work out, you're in a bad spot. So that's something that you have to look at. But again, with your financing options, looking at conventional, looking at um, hard money loans, high interest loans, you have syndications. There are a lot of different financing options that are available in commercial real estate. Each one has its pros and cons. I would say most investors are using conventional financing and not hard money or not syndications. And that is there are a number of reasons for that, but a few that immediately come to mind is just again the ability to leverage their existing banking relationship that they have personally or for their business and roll that into like commercial real estate financing, which you already have a track record experience with that lender, have all your information. Um, so that makes it a bit easier to transact. And then of course building that lending relationship. So as you expand your portfolio, more properties is very important. As an agent, it's important to have relationships with the lenders, debt and equity sources as well, because you're going to have clients that are going to need help getting financing, or they're going to need help maybe even raising some equity to be able to put the down payment for the property. So building those relationships is really important. That's going back to the networking events and the, reaching out to people on a weekly basis. It's really important. Finally, the exit strategy. So, every deal that I work on, whether I'm buying a property, whether I'm looking to develop a project, whether I'm looking at listing a property for sale, working with a landlord to lease their property, I'm always thinking about the entry strategy and then the exit strategy. So, what do I need to do to execute the best case scenario and the worst case scenario and the most likely scenario? And then for most investors and for most agents, commercial real estate, you have to fully understand what is the investment goals and objectives of the client. Is their goal to hold the asset for an extended period of time, anywhere from 5, 10, 15, 20 plus years? Is their strategy to buy the property, renovate, fix it up, lease it out, and then refi, take some cash out, buy another one, do it again? Or is the strategy to buy a property, fix it up, and sell it, and just flip it, right? So there are different exit strategies, just like in residential real estate, but it's important to stress test each one of those different scenarios. So in every property that you're looking at, understand what are all your options and what are all the various exit strategies. Just a quick, again, just I'll just mention these quickly, and we'll take a short break. Uh, at 12. So you have SBA 504 and 7A loans for owner operators. So again, you're going to have clients that are own businesses and they're looking at buying a commercial property for their business. So that's a good resource, SBA 504 and 7A loans for the owner operators. The traditional commercial loans, we talked about that. Seller financing is also a great tool as well. I think last year I did 4 seller financing deals where the owners of the property essentially provided the financing to the borrower and the prospective buyer, as well as joint ventures. And the joint ventures are more so for like development opportunities. So if you're selling a piece of land, maybe you're connecting the landowner with the developer, and there's not a sale of a property, but there's a joint venture where the landowner says, "Okay, let's partner together and build something. I'll put the land up, you build it, you could raise all the money, you put all the plans together and take it through the process and get it teed up for the development, and we figure out a appropriate split of the profits." So again, that's another option. Then of course, private money and syndication is because become more popular recently. And I think again, you just have to be mindful of like the amount of fees and then also just the interest rates. But again, these are all viable financing options. Again, whether you're an investor, whether you are a business owner, or you're an agent. So again, raising capital is always a challenge. Whether you're, looking to buy your first residential property for your personal residence, or whether you're looking to buy your first investment property, raising capital is always a challenge. Every investor, every um, agent that I know is always talks about the ability for a client or themselves to raise capital. So raising capital as a beginner in this business is really important. And being able to identify capital sources is important as well. So as an example, going to real estate investor networking events, meetups, connecting with other buyers of commercial real estate, connecting with lenders, financial advisors, wealth managers, and folks that represent people who invest in real estate or are looking to invest in real estate is a great way to find opportunities to partner with investors. Obviously, being mindful of like what is the amount of money you need to save to be able to finance the property, and how can you create a a plan, financial plan and budget to be able to do that. So again, through savings, through some folks use home equity line of credit to be able to raise capital. And then again, as I mentioned, crowdfunding and syndications. So that's again raising money through accredited, non-accredited investors to be able to get the equity needed to acquire the market. So we'll take a short break. Take like a Then we'll take like a 5 minute break here, and we'll talk about the process of closing the deal, and then we'll talk about it's like key takeaways for investors and continue along. Again, guys, this is being recorded, so feel free if you have to step away. You can always come back and look at this video. And again, if you have questions, just feel free to comment below and drop it in the chat. So we'll take a short break, and then we'll continue along here. So we'll start back at, I think it's 12 o'clock now. We'll start back at 12:05. All right, let's go ahead and continue here. Okay, so a common question for folks just getting started is how do you close a deal? What is the process of closing a transaction? So again, identifying the property, whether you are the agent, whether you're a buyer, is the first step in going through the process of doing some initial due diligence on the market, on the property, getting all the information from the agent, from the owner, and going through the process of confirming the pricing, confirming the condition of the property, scheduling a tour, having a contractor come with you, pricing out what could potentially need to be done to the property to convert it for a particular use or to bring it up to code. All of those things are done as a part of initial due diligence, and then determining what is the appropriate offer to make. And the offer is submitted in a form of a letter of intent, which is a non-binding proposal that outlines the high-level basic terms and conditions of a transaction. So, as an example, what is the purchase price? What is the deposit? What is the study period? What is the closing date? What are the rights of the buyer? What are the rights of the seller? Are there any contingencies? And what is the um, title company and the settlement company going to be doing to help close the transaction? So once a letter of intent is negotiated, typically he will go back and forth. I would say in my career, I've only seen probably a handful of letter of intents be accepted on the first go. Typically, there is a back and forth in negotiation. But once that is agreed to, a letter of intent is executed by both parties, and then contract is drafted, and then that is negotiated through the buyer and seller and their attorneys, and then that is executed. Once that's executed, you start a series of intense due diligence, like really getting into the weeds of the property. So having the title search done, getting a property condition report, getting the appraisal schedule in order, having a various contractors inspect and provide estimates and bids for any work that needs to be done to the property, checking with that local jurisdiction where the property is located, so that that city or that state or that county, making sure you understand what are the property taxes, if any, what are the any notices related to the property. Also, finding out any information related to future plans for the area. Are they going to be expanding the streets? Are they going to be making infrastructure improvements? What other projects or um, new developments are coming to the area? All those types of things are important as a part of your due diligence to ensure that you know exactly what you're buying and that you can use it for your intended use. So again, being able to go through this intense due diligence process, which includes but is not limited to everything I just said. As an example, um, lenders will require a phase one environmental assessment of the property. So making sure there's no hazardous materials on site, making sure there's no underground storage tanks, things of that nature. In commercial real estate, particularly in industrial and office, and even some retail properties, the historic use of the property, what you see it as today, excuse me, it's a completely different use for what it was in the past. So one of the things that oh excuse me, sorry. Give me 1 second. All right, thank you. Water that went down the wrong pipe. So one of the things to keep in mind is looking at the all of that due diligence information and understanding what are you buying, what are the opportunities with the property, what are any challenges with the property as well, and then heavily relying on the title company, the settlement company, your consultants, your agent if you're a buyer, or even other if you're a new commercial real estate agent, really relying on senior agents in your office and at your brokerage or a mentor or coach to help guide you along in the process. So that's very important. Finally, it's getting the closing costs, reviewing the draft HUD one, reviewing all the settlement documents, going through that with the client and their attorney, and going through all of the legal considerations related to the performance of the contract, and then preparing for settlement. So again, series of steps involved in that, but high level, going through this process ultimately gets you to the point where you're in a process where you can get ready to close. One thing that I didn't mention, which is critical, is getting the financing. That is a given. In commercial real estate, I would say 95% of the deals that go under contract, the buyer already has their financing either like pre-approved or they're in the process of getting it. So that's very important. If you're representing a buyer, help them get pre-approved before you start going out and looking at properties, just like in residential real estate, or at least be in the process of getting them pre-approved, because that often can hold up negotiation, or you could lose opportunity because they don't have the financing, or they can't demonstrate their ability to get financing. So that's something to keep in mind. So getting all of those things in order is critical, and ultimately you get to the closing table and you're able to successfully complete the transaction. So there are a lot of steps in the process. There are a lot of things that can go right. There are a lot of things that could go wrong. But generally speaking, the process is the process. Whether you're selling a $500,000 property or a $5 million property, it's generally speaking, it's the same. But depending on the property, because every deal is different, every property is different, it could be a lot more information, a lot more issues, a lot more problems to solve. So that's something to keep in mind. So just some key takeaways for investors. Like most folks, when you're getting started, you start small. So start with small office, retail, industrial property. Start with multifamily. Start with a single family home that you may rent out as an Airbnb, and then go up to a multi-unit, and then increase from there. Everyone who started investing in real estate started with their first investment property. So there are a lot of different investment offerings for folks who are getting started. One that I recommend folks look into, that I think is going to continue to grow, is definitely Airbnb, but then also Pad Split, and that's a pad split, so PAD split, pad split, where you can rent rooms on a weekly basis to tenants, and investors typically will buy a single family home, convert it, say a 3 bedroom into a 5 or 6 bedroom, and then rent the rooms out on a weekly basis. It's a good model, particularly in high rent areas where folks cannot afford studio or 1 bedroom apartments. So offering affordable options as well. So again, those are just several examples. There are others out there, but start small. Network with brokers and investors, build relationships. Again, you gotta um, build your network and meet people. Go to conferences, go to networking meetups, use your LinkedIn, use your professional networks, use your family networks. It's really important. As an investor, it's critical to focus on cash flow and not just the appreciation, and to take action when necessary and not overanalyze a deal. You can spend weeks, if not months, just going through trying to analyze a deal. And before you know it, you might miss the opportunity. So don't overanalyze. Quickly find a way to underwrite, see if it's a good deal or a bad deal, and make a move. So transitioning here a bit, we're going to talk about what commercial real estate brokers do. And I'll leave, we have probably another 10, 15 minutes, and I'll leave some time for like questions and for any topics folks may have or that they may want to discuss. So commercial real estate brokers represent buyers, sellers, landlords, and tenants, negotiate leases and sales transactions, provide market data analysis and investment advice, as well as specialize in specific property types, as we had talked about earlier. So again, we talked about different concepts today, brokerage and investing. You might be wondering what's the difference. So I'm just going to run through these quickly. Brokers, commercial real estate brokers earn commissions. Commercial real estate investors build equity through their properties. Commercial real estate brokers absolutely need sales and marketing skills, and commercial real estate investors purely focus on the numbers. It's not emotional to like I'm buying a like if I'm buying my first house and this is where I'm gonna raise my raise my family. It's not more an emotional decision. It's purely based off numbers, profit. And I'll also say that, you know, brokerage is a great way to get started in commercial real estate because you learn the business, you're building relationships, and you're making money from selling properties. It's a great stepping stone to ownership as well as to development. So, steps to becoming a commercial real estate broker. Obviously, every state is different. I know we have folks. I think we have folks from all over the country here today. So, DMV, Atlanta, New York, LA, Texas. So it's specific to the state that you live in, guys. But I would say in most states, it's a pretty simple process of taking a pre-licensing course for your real estate license and getting your real estate license, which, like as an example, in the state of Maryland, there's one, it's the same test, whether you're selling real estate, residential real estate or commercial, it's one test. So um don't feel like you have to be overwhelmed with, oh, is there a different test or is like different process? It's the same process in the state of Maryland. But again, check your state for specific requirements to make sure. Next is choosing a brokerage firm. A lot of great brokerage firms out there. For my friends and my folks that are considering like adding commercial real estate brokers to their residential real estate practice, I think that's a great idea. And the reason I think that it's a great idea, particularly in this market, is that the sales and leasing of commercial real estate, it takes a while for deals to transact. So it might take you 3 months to sell a property. It may take you 6 months. It may take you a year, even to do a lease agreement. Some of these transactions take a long time. So being able to sustain your business with residential real estate, investing in sales and leasing is really a great way um to like grow and scale your business as you start into commercial real estate. So you have independent firms, brokerage firms, you have national brokerage firms, you also have you have brokerage firms that are specific to a particular region or particular city, and that or a particular niche, right? So certain brokerage firms will say we only do tenant representation, or we only represent landlords, or we only do retail. That's all we do, right? So there's benefits to being for larger national brokerage firm. My firm, NAI Global, we're I think top five largest commercial real estate firm in the world. So that allows us to use all the offices that we have across the country and the world to be able to do deals and help clients in other markets. Obviously, um, with a more independent firm, there's more flexibility. It's not as corporate and buttoned up. Excuse me. There's the opportunity to be able to have more, more of a role in terms of like shaping that company culture and growing and scaling it into a larger regional or national firm. So again, looking at a brokerage firm, it's important to understand what is their market share, what's their track record, do they do residential and commercial? Is it only commercial? If so, what is the professional development that they offer? Who are the newer agents at that firm? What's their experience been? What are the splits? What are the um, resources that they offer? Do they have in-house marketing, legal department, IT, etc.? So those are just some things to keep in mind. Again, understanding the market. So again, when I first started, I picked, you know, three areas. I said I'm going to just learn. I need to learn every part of DC, Prince George's County, and Charles County. So I would spend weekends, um, going out driving for dollars, looking at different properties, going to different neighborhoods, going to places I've never been before to understand the market. Building relationships again is important when you're first starting. So everybody that you know, you need to let them know that you are investing in commercial real estate or you're looking to or you're selling or leasing commercial real estate, you want to help them or if they know of anyone to connect. Referrals are very important. I would say at this point in my career, probably 80% of the business I get comes from referrals. When I had first started, I didn't know anybody who owned a property. I knew a couple people that owned businesses, but they weren't ready to buy or lease a property. So I really had to network. And so I had to make a list of businesses, network, use LinkedIn, use Facebook, use Instagram, use my family, my friends, different like church uh, connections, connections from high school, connections from college. You know, anybody that I knew, I had to reach out to them, let them know I'm now selling commercial real estate. I'm leasing commercial real estate. Anybody has a need, please let me know. And getting their email addresses and their phone numbers. So I had a list that I just kept, and I would just add to the list every week. And over years, the list has grown to thousands of people. So that if I have a property I'm selling, or a deal that just closed, or um, a client that's looking for something, I can send that off to that list. And then remind them, hey, keep me in mind. If you know anybody looking to buy, at least or sell commercial real estate, please reach out. So you want to be top of mind when people think of commercial real estate, you want them to think of you so that they will pick up the phone and call you. Last thing is specializing in a niche. We talked about this: retail, industrial, office, multifamily, land, hospitality. There's a lot of different areas you can go into. I would say pick two and study it, learn it, understand the nuances between, you know, each property type of asset class. Because you don't have to do everything in the commercial real estate industry. You don't have to be a jack of all trades and do everything. You just have to get good at one or two areas and focus on that, and you will be super successful and make a ton of money. So again, the skills that every commercial real estate broker needs, you got to be able to market yourself and promote yourself, and you got to be able to have sales and negotiation skills, financial and marketing analyses, networking and relationship building, as well as marketing and lead generation. So we talked about how to find clients, cold calling, the letters, postcards, social media ads, Google ads, leveraging LinkedIn and your social media following, attending industry networking events and conferences, and then partnering with residential agents for referrals for your commercial real estate practice. So again, we talked about um, like closing the deal. So just again, understanding that it is important when you're listing the property, you representing the seller, that you do your best to get as much exposure for the property as possible. So one of the things that I had learned when I first started in the business is when you have a property you just listed for sale, the first step is to send a letter or the flyer to all the neighbors because the neighbors typically will be the ones who are most familiar with the neighborhood, obviously, because they're there and they've already owned or bought a property in the neighborhood, so they may be interested, particularly if it's a neighbor that's right next door. It's happened several times where I've sold the property just to the neighbor, and it was very quick because they would say, hey, if that property ever became available, I would buy it. So you always start with the neighbors, make a list of all the neighbors in that area. I would typically do a broader list of just like the that particular street or like 2 to 3 streets over and create like a radius area or even broader list, and I would just be the entire zip code for where that property is located. Now, obviously, some zip codes are larger than others, so you have to curate the list. But that is a good way of getting the your marketing out there and your name out there. Again, being able to qualify clients is really important. I think when I had first started, I was so hungry to just close a deal that I was willing to work with anyone, and I wasn't being mindful of qualifying clients. So I'm just going to give you guys a couple of qualifying questions you can ask a client in commercial real estate to be able to get some baseline information on who they are, their business, what their real estate needs are, and how you can help them. So I typically, if a client, let's say someone calls me and they're interested in one of our properties, I'll ask them, their name, the name of their company, how long they've been in business. If they have a website, they can send it to me. Then I will ask them for their like what their real estate needs are, what piqued their interest in this particular property, what are the things that are very important to them that they have absolutely have to have, what are the things they're flexible on, and then put all that information into my notes or into an email and then share it with the owner and provide a recommendation of, hey, this group, hey, this is the company, they've been in business for 10 years, this is the services or products that they offer. They're looking at, leasing 10,000 square feet. They're looking at moving in June. They want to sign a 5-year lease, etc. I'm not asking the client for their financials as of yet. Typically, I will ask the client for the financials once we get to the point where there's a proposal or letter of intent that is formed. Now, for you as a agent, it's important to again just be clear with the client that they're going to have to provide the financials, whether to a landlord, or whether to a lender, or whether to a seller. At some point, they're going to have to share the financials so that again, checking account statements, tax returns, profit and loss statements, uh, balance uh, um, balance sheets, audited financials. That information is typically protected in like a confidentiality agreement between the parties. But again, just setting the expectation for the client that you're going to have to qualify them, and that other groups are going to qualify them as well. So again, once the client is qualified, of course, all the tours, the marketing, getting as many people exposed to the property as possible. We've already talked about negotiating the terms and the importance of having the client having a lawyer for a lease or for a sale, and then we talked about the closing as well as getting paid. We'll talk about that. It's fairly simple, guys. For my friends who are here today, who are real estate agents currently, we get paid from commissions, right? Leasing and sales commissions. In commercial real estate, it's the same. Are some nuances, and some of these nuances are specific to each state or jurisdiction. So, as an example, as an example, in commercial real estate, there's no set fee at all. So each deal is different. So, some properties I sell, I might charge a 5% commission. Some I might charge six, seven. Some properties that they're a little more complex, or they want to take a longer time, I may charge 10%. Some uh, properties that are maybe worth a higher price point, let's say north of 10, 15, $20 million, maybe I'm not going to charge them 6% for that. Maybe I'm going to charge them 4%. So every deal is different, but you getting paid is essentially off the commission, the gross value of that lease or of that sale times your commission. And something to keep in mind is looking at how you're paid. So obviously, you're selling a property, you're paid at settlement. But for leasing, one of the things to keep in mind, because I think just from like my mentees and folks getting started, I don't think it's been clear to them, and they don't teach you this in real estate school, how you get paid, right? On the leases. You don't have much control in terms of the function of how you get paid when you are representing the tenant. When you represent the landlord, it's codified in the listening agreement. If the landlord is paying your commission as the agent representing the tenant, you are at the will of that landlord. So the landlord's agreement can say that they pay you 50% when they sign the lease and then 50% when they move in, as opposed to 100% upfront. So I say that to say it's very important to when you are representing a tenant and when you represent a buyer to confirm what the commission is. Is there a co-op fee? Who's paying the commission? How is it paid? Every time you work on a transaction, you want to verify verify those details. So again, just continue along here before we wrap up and leave some time for Q&A. These are the various commission structures we talked about: listing commissions versus buyer rep commissions, this various splits at different brokerage firms. So, depending on what firm you're with and what they offer, if it's independent, regional, or national, it could be 50-50, 70-30, 80-20. It depends. Every firm is different. I will say that, you have to um, look at a bunch of different firms, talk to a lot of different firms. You're looking at a firm and figure out which firm is best for you that suits your goals and objectives, short term and long term. But understand that the splits that you agree to with the brokerage, you should be getting a return on your investment. Like whatever they're getting, the split they're getting, you should be able to attribute that to the value that they have created in your business. So it's something to keep in mind. The last thing is residual income from leasing deals. So again, there are a lot of creative ways of structuring commissions. When I first started in the business, I got some advice from a senior broker in my office that, hey, for clients that they don't want to pay you all of the leasing commission up front, let's say it's $50,000 in the commission, like, man, we really don't have the 50,000 right now to pay you. Okay, well, as opposed to me getting 6% over right now all up front, what would it look like if I got 10%, but I got paid every month for the next 10 years, right? You would make more over the life of the 10 years. The downside to that, only downside to this creative structure is that you are sharing in the risk with the landlord that if the tenant leaves and they stop paying you rent, you might not get the rest. But again, case by case basis, I've done this numerous times when I first started in the business as a way to build in like more passive income. So every month, knowing that, hey, I can get, um, monthly fees from these commissions over the next 5 to 10 years. So I think most, I would say most agents, they're taking the money all up front. I would say the most successful agents are taking a portion of their commissions and trying to find ways to have more passive income. So creating monthly streams of income. as opposed to just getting large, lump sum checks. So the first year projection income expectations are important. We talked about average timeline of your first deal. You first starting, like it takes a little ramp up time. Do you build your your business up, get clients, get in front of owners, get listings. So, when I first started, it took me, I think, it took me almost 6 months, like to close my first deal in terms of sales. I think I did maybe a couple small leases, working with a senior agent in my office, but generally speaking, it took yeah, about 6 months. So it's very important to set financial goals. When I had first started, I had just left working at a bank. I had about a year's worth of savings to carry myself in the event that I didn't make any money. And the first year I think I made I think the first year I only made maybe $40,000. It was horrible. And that's when I really had to lock in, and I figured had to figure out a way to scale and grow my business. And this is why, again, why I teach and I mentor and I coach investors and real estate agents, because I remember how difficult it was when I first started and I didn't know everything, and it was like, man, am I good enough to do this? Am I doing the right thing? Am I is how long is it gonna take me to make some money in this business? So again, it's important to have a mentor and a coach. Again, following the session, I'll share information with you all about the mentorship and culture program, which I think is really critical to being successful in this business. You got to have a mentor or a coach, whether someone like myself or someone at your brokerage who maybe does commercial real estate, or someone at the a commercial real estate brokerage firm that you build a relationship with and they're willing to mentor you. That was very helpful for me, so I highly recommend that. So again, to scale your brokerage business, you have to be able to have a pipeline, right? And so always prospecting. I take at least 1 to 2 days out the week, and that's all I do is prospecting. So calls, emails, follow-ups, text messages, social media, and getting in front of as many potential clients as possible. So again, one strategy is to just dedicate a day a week to prospecting solely. The other thing is to make sure you have clean data, so constantly getting um, updated information on properties that are available for sale, clients that are entering into the market, and promoting yourself and your listing. Okay, so that concludes the seminar, guys. I'm gonna leave some every 5 to 10 minutes for questions, and then we'll wrap up. Again, this is the first step for I think most people that looking to get started attending a seminar like this. The next step is to reinforce the concepts that we made. So this not it's not good enough just to sit and listen to this and that's it. You have to act on it. So please take some time to go back through the video, rewatch it again, review the notes and the supplemental information I was sent to you all. In addition, I just published a ebook called The Business of Commercial Real Estate, which I just published on Amazon. I'm going to share that with you all, and it is a very good guide. So I think it's about 80 pages plus pages of the details, nitty gritty of the business of commercial real estate. So I will happy to share that with you guys, as well as additional recommended readings and resources, as well as a link to a commercial real estate mentorship program, network, the different um, program levels that we have, online course content, as well as a link to the YouTube channel, which I hope that you guys will like and subscribe so that we can go ahead and stay connected. Anytime that we post a video or a seminar, you're able to get a notification for those videos. So we have a lot of exciting content and educational opportunities for this year, as well as planning like in-person and virtual networking events and creating a network and tribe of commercial real estate professionals. So with that, we will take some questions and then we'll wrap up so you guys can enjoy your weekend and get ready get ready, rested and relaxed for a new week ahead. So if you have any questions, guys, just feel free to use the chat. So let's start with Mackenzie. So Mackenzie asked, um, should we look what should we look for from a mentor as we enter to commercial real estate from a beginner level? As we also look to get started, when should we pursue a license in real estate in the timeline of gaining experience and exposure? Great question, Mackenzie. So I will to answer your first question, what should you look for in a mentor? You should look for their track record and experience. I think it's really important to find mentors and coaches that have done what you're already looking to do. When I had first started, I knew that one, I knew I wanted to do a lot of different things in commercial real estate, but I knew that I needed someone who just didn't focus on one particular area and that was it, but had some varied experience. So one, connecting with a mentor and coach that has a track record of success and experience and can help save you time and energy and not making the same mistakes they may have made, and then learning from their clients' mistakes and successes as well. As it relates to the second question, when should we pursue a license in real estate in the timeline of gaining experience and exposure? I say you can do it on a parallel track. It only took me at the time I had took a pre-licensing course, but I had did it over a 2 week period where I was in class pretty much every day for 2 weeks from 9 to 7 o'clock, 7:30 at night. I was able to knock that out in 2 weeks. But if you're not able to do that fully, like all day, or you currently work, you can do it in the evenings and you can do it at night, on the weekends, and it will take you, I think, about a month to a month and a half to complete the pre-licensing course, and then at that point, you're just studying for the exam. So all in all, I would say a good timeline is 3 months of of taking the pre-licensing course, completing that, and then giving yourself at least a month of like studying, preparing, taking practice tests. And the good thing about the licensing exam, whether it's in DC, Maryland, or Virginia, is that once you complete the licensing course, you have, I believe, up to a year to take and pass the exam. I'll be honest with you guys. I definitely had to take the exam more than once, more than twice. I'm not gonna say how many times I took it, but let's just say I had to take it multiple times. And so don't feel discouraged if you have to take it more than once. The most important thing is as you're doing the practice test and as you're going in the course, and even when you're doing practice tests in preparation for the exam, and when you take the exam, focus on the areas where you have maybe struggled with and really double down on learning those concepts. So happy to help, happy to talk more about the coaching program. But in my opinion, I would gain experience from a coach and a mentor, get some exposure on like kind of shadowing on deals, and then work on getting your license. So that way, once you get your license, you can hit the ground running. All right. Tish says, thank you for this introductory information. I'm a residential real estate agent, piquing the interest in selling commercial real estate. How do you suggest the best way to find a mentor as many knowledgeable agents are super busy? Yes, I completely understand. And I will say that you have to be intentional of what you're looking to get from a mentor, right? So when I had first started, I knew that I needed a mentor that was going to be hands-on, that if I needed had a question, maybe I wouldn't be able to just go to their office at the drop of a dime and get an answer, but I could at least within 24 hours get a response or some help and assistance. And then somebody to guide me along as I started to meet with owners. Hey, how would you value this property, or how would you market this? Bouncing ideas back and forth. So I would say again, the track record and experience part is important, as I had just mentioned, but also like the capacity of the mentor and coach. So again, I offer weekly, bi-weekly, and monthly coaching calls. And I would say most of the folks that I have worked with and am working with, they prefer a little more hands-on mentorship and coaching. So that's like weekly calls where we'll go through and we'll talk about, okay, what are your goals and objectives for this week? What are the action items? What are you struggling with? What do you need help with? Okay, let's talk through this deal. Let's go through and value this property. Let's go through this contract. Let's go through this lease. So it's very hands-on because once you get going and rolling, you're going to need to have someone who can help you along in the process. So happy to talk to you more about it. All right, so we have one more question, guys, and then we're gonna wrap up. So Adrian asked, as a licensed licensed residential agent, is the CoStar paid subscription necessary with already having MLS access? I will say yes, and the reason for that is because most commercial real estate firms, they do not use MLS. So oftentimes the properties that are on CoStar and LoopNet are not in MLS, and so you may miss opportunities by not having access to it. Some brokerages pay for it out of their own pocket. Other brokerages require you to pay it on a monthly basis. But I definitely will say if you are looking to do commercial real estate, you're going to need access to CoStar. So as you're looking at brokerages or you're with a brokerage and they don't have it, I would recommend that they look at getting it because again, it's a research platform, it's a tool for you to be able to identify buyers and sellers and tenants and landlords, as well as pulling market data that you'll need to do valuations and underwriting. It's an effective tool, and then also, you marketing your listings there too. So again, happy to talk to you more about it. But again, guys, this has been a lot of fun. I really enjoy teaching and giving back. This has been how to get started in commercial real estate. And I'm looking forward to all that is in store for this year. I usually do these seminars starting off the year to get help people kind of get started as you're mapping out your game plan for this year. So I look forward to scheduling follow-up calls with each one of you all to be able to talk more about your specific goals and objectives and how I can help. I'll send out a link with a calendar for some available dates next week and the week after. We can schedule a call and just talk through your goals and objectives and next steps. So again, thank you all so much for joining. This has been a lot of fun. I know you guys are going to be super successful in this business and the best is yet to come. And make sure you guys feel free to share this seminar. Feel free to follow our YouTube channel and feel free to like and subscribe and share this video. So again, thank you guys so much for joining and I hope you guys have a great day. Thank you.